Hello fellow Forex traders, this is Mark from TradeDeskPro.com, the technical analysis and trading academy for the financial markets. This is another edition of the TradeDesk Pro Market Opinions. Before we start, I have to go through the risk disclaimer. I will leave this up for a few seconds so you can pause the video and read the entirety of the risk disclaimer. I will just mention this: any opinions, news, research, analysis, prices, or other information contained on this website and in this video is provided as general market commentary and does not constitute investment advice. TradeDesk Pro will not accept liability for any loss or damage, including, without limitation, to any loss of profit which may arise directly or indirectly from use of or reliance on such information. Today is the 22nd of January, Sunday, and this week I just wanted to focus on the euro dollar. Especially since we've seen some dollar weakness in all the other dollar-based currency pairs. I do think that the most important pair to watch this week is the euro dollar. I am hoping to wrap this up under 5 minutes, but I do want to make a top-down analysis starting with the monthly, because every time frame has one or two things I want to talk about. So let's start with the euro dollar monthly chart. If you look at this trend line, this blue one, has been broken and we're retesting it now. So pretty important time to look at the euro dollar. If we break this, we might be getting into a lot more bullish phase than we are already in. And why am I saying that? Because on the weekly chart we see we have 5 consecutive weeks up, and I haven't checked in detail, but I do think that the last time we had 5 consecutive weeks up, that was in August 2012. So that's a few years ago. All right. If you're wondering about everything on this chart, please check my earlier video on the euro dollar from the 7th of January. Now let's go to the daily chart, and there's only one very important line on this chart, and that is the purple one. As you can see, it's an internal trend line which has been resistance, support, trading around it, support, resistance, and resistance again. And the most important thing here is look where it crosses. It crosses through the gap that was created in November from last year, and that's why I'm thinking to get through this resistance we're going to have another gap up today. I'm assuming, okay? If that's the case, I'm not really sure that this is not going to be a runaway gap. So for gap traders out there, I would be very, very careful. Let's quickly move down to a 4-hour chart. A new fork identified. Targets, well, you can see this here. 108.20 would be in the next couple of days. That would be a conservative target in my opinion, but we'll see. Then going down to an hourly chart, we have been trading in this hourly up sloping fork for quite a while, except of course the beginning and the end of the year spikes. I do think we're going to move out of this fork to the upside, and if we look at this target 108.16, that is really close to the 4-hour target defined of 108.20. So I do think we have to start being very, very bullish on the euro. That was it, and happy trading. Be careful out there, and see you next time.